Well, in the last 2 months, analysts have raised their 2011 prediction for gold more than for any other precious metal. According to a Bloomberg survey, gold could hit $1,500 an ounce next year. We're joined right now by the most accurate commodities forecaster in the first quarter. Eugen Weinberg is head of commodity research at Commerzbank in Frankfurt. Eugen, thanks so much for joining us. So the gold rally has lasted quite a while. Is this year going to be the 10th to charm?
Yeah, it is still a very golden year, probably, and based on the current price dynamics behind the gold prices, I wouldn't really rule out that not in the fourth quarter as we predicted before, but even in the next couple of weeks we will reach the new highs. Gold seems to be an ultimate investment right now. Whether inflation or deflation, whether economic acceleration or a slowdown, gold seems to be the place to be at the moment. It's still too good to be true for me. In the medium term, I think we will see correction meanwhile, but in the longer term, definitely the gold price is poised for new highs.
Because we're at about a 2-month high today, and I think your year-end target, if I'm not mistaken, is 1250. So I'm guessing that you think 1500 by next year is too aggressive.
I think it's a little bit too aggressive based on the fundamentals, but the market seems to be very focusing on a different set of the fundamentals right now. The market seems to be looking more into the very expansionary fiscal and monetary policies in the US after the new economic measures that have been announced last night, but also after the Bernanke put has been effectively put in place with more quantitative easing on its way. So the market seems to be looking through the current weak period of gold and looking into the next stage, into the inflationary stage probably, and pricing it in. I think it's a little bit too early.
Eugene, how much are the big guerrilla funds out there moving the price of gold around? We know Soros Fund Management recently sold off some of its gold position. In fact, Soros himself described gold as the ultimate asset bubble. Are the big gains gone? I mean, how much influence are these funds having in the price?
If you're looking at the statistics from the ETFs holdings, from the exchange-traded funds investing in physical gold, you will see that over the last years, that has been the most influential part of the demand, the most dynamic part of the demand, which has been moving prices. And who is holding the holdings of these ETFs? The big funds. So the big funds are shaping the market and will still be shaping the market in the next months, but also for the next years. We've done a very small calculation that if you invest only 1% of all the holdings in equities and bonds worldwide into gold, you will need to buy the mining production from all the mines worldwide for another 15 to 20 years. So definitely the big guys, the investment funds, should they look more into the gold in the future, they will be shaping the market, they will be driving the prices from one high to another.
Eugene, thank you very much. Eugen Weinberg joining us there from Commerzbank in Frankfurt.